And there's enough upside on this single deal where they can increase the property value by $1.9 million. Hey, I'm Cody Charnell, multifamily real estate broker here in Long Beach. And today we're going to be checking out this 30-unit building that recently closed here in the city of Long Beach. Just a little disclosure, I was not involved in this sale. I'm simply bringing it to you so you can see what's happening in our local market and learn a little bit about underwriting deals. So if you find any value in this video, please like it, share it with a friend, and without further ado, let's get into it. Okay, so let's start off with the location. So the property address here is 497 St. Louis. So let me zoom in on the map here. So this one, it's located, like I said, in Long Beach. This is all of Long Beach here. And it's located in a neighborhood called Rose Park South. And Rose Park South is a historical neighborhood. It butts up to Rose Park and to Carroll Park. This location has a ton to offer. Just a little over a block south of this property is the 4th Street corridor. People commonly refer to it as Retro Row. So from Cherry all the way over to Junipero, you have a whole block of commercial storefronts with really trendy restaurants, coffee shops, wine bars, vintage stores. It's a popular place for people to hang out, and it's a great amenity to have close by if you are a tenant living in a building like this. Something else that I like about this location is that it's kind of equidistant from downtown Long Beach, which is another place with a lot of shopping and entertainment, and 2nd Street, which is right over here on the map. So you're not far from either, and you're just 4 blocks to the Pacific Ocean. If we look at the property on Street View, you can kind of get an idea of what it is. So this is a 30-unit apartment building. So it stretches, this is one side of it, stretches all the way over to here, a bit blocked by trees, but really good sized building. And something kind of nice about being in a historical neighborhood is that you have a lot of interesting architectural styles. So you have craftsman style properties, Spanish style properties, you have some Art Deco properties, and yeah, this is kind of cool, 1960s looking building. So very interesting neighborhood to be in. And one other thing that I think is kind of cool to know is that if you're in Long Beach and you're ever wondering if you're in a historic neighborhood, you can look at the street signs. So most of the time, street signs are going to be blue, but when they're white like this, that means you're in a historical neighborhood. So you can see here they have the little Rose Park South logo. And yeah, there's quite a few historical neighborhoods in Long Beach. So you'll see those around pretty often. Okay, so now let's take a look at the building. So like I mentioned, this is 30 units. It's over 22,000 square feet of living space, and it was built in 1987. So because it's 1980s construction, typically those buildings will have more modern electrical systems. They'll have copper plumbing. They'll have decent unit layouts, and they typically have a lot of parking. And this building definitely has a lot of parking. It has 45 subterranean parking spaces, plus there's 27 rentable storage units downstairs as well. You also have a laundry room and a leasing office on site. And those 30 units are split up between 16 one-bed, one-baths. You have 13 2-bed, 2-bath units and 1 3-bed, 3-bath unit. Like I said, there is a lot of upside on this deal. So we'll talk a little bit more about the rents in a second. You can also see, kind of looking at the drone footage here, I took this drone footage right after it rained, but it looks like this roof is going to need work. So if I was going to buy this property, I would budget to put on a new roof. From what I could see, it looked like this building had been decently taken care of. Because of this location, I think there's a lot of opportunity to really take this into that kind of luxury rental space and really increase the rents on this property. And speaking of rents, now let's take a look at the numbers. Okay, so this is my pro forma on this property. The listing price on this deal was $9.5 million, and it ended up selling in just 16 days for $9.4 million. So The buyer was able to get a $100,000 discount. Like I mentioned before, 23,000 square feet on a 20,000 square foot lot. You have 30 units, which makes the price per unit about, let's see what it was, 313,000. And here we have the unit mix and rents. So those 16 one-bed, one-baths are averaging about 1630 or 1635 per month in rent. The two-bed units are averaging 1972, and that three-bed unit is paying 2095. Market rents for these, there is a decent amount of upside. So for the one beds, I think you can get 2150 in this area. Two beds closer to 2500, and the three bed 2900 pretty reasonably. There's no additions here on the pro forma for the subterranean and parking or for the laundry or storage. So just keep in mind that those things would add a little bit of additional income here, which would make this even a sweeter deal. If we come to the summary tab, so you can see how the metrics look. So they're paying 313,000 a unit when they bought this. That works out to 398 a square foot. It's priced at 14.5 times gross based on current income and 11.2 times gross based on market rents. So people love value add deals, but having low rents is definitely a double-edged sword when you're looking in the 5-unit and up space. And that's because commercial lenders are going to lend to you based on the property's performance today. And they're going to force you to put enough money down to make that property cash flow from day one. So if you're getting a conventional loan on this one, you're going to need about 52% down. So that works out to 4.8 million. For financing, I'm assuming a 5.8% interest rate. And with that down payment, you're able to hit a 1.2 debt coverage ratio. And that's the metric that is usually the limiting factor in these loans. So that's the minimum debt coverage ratio that most commercial lenders want you to hit. I'm also budgeting here for renovations. So in order to achieve those higher rents, I'm budgeting for 30 grand per unit in renovations. It may not need that, but in my opinion, it's better to be more conservative. I'm also adding $60,000 here for a new roof. So on top of that $9.4 million purchase price, you're looking at another, let's say, 960 grand in renovations. And then if we scroll down here, you can see kind of current versus market performance. So these are our current rents. So right now it's collecting about 53,880 per month in rents. You can increase that to close to 70,000 once you include laundry and any storage rent that you're able to collect. This number should be over 70,000. So that's about 30% upside in rents. If you scroll down here, you can see gross rents minus vacancy minus our expenses from over in this section and minus our debt service payments. So this property is going to be cash flowing about $64,000 per year off the get-go. And then once you're able to raise rents, after taking out those same expenses, you're going to be cash flowing about $225,000 per year. So that's great cash flow, but I think the real benefit on this one is the upside in equity. So apartment buildings, the value is calculated based on how much revenue they produce. So if you're increasing rents by 30% on this property, there is quite a bit of upside in property value. So this stabilized market value assumes that you're able to either refinance or sell based on a 13.5 gross rent multiplier. So with those new rents, that gives you an exit value or a stabilized value of 11.29 million. So it's almost $1.9 million upside that you have on this property. So you do have those expenses that we talked about. So 960K in renovation costs. So you're going to be netting around $1 million of upside on this property. So once you get the rents up, I would expect that this owner's probably going to refinance, pull some cash out, and probably go buy another value add deal. All right, so that's the property. Let me know what you guys think about this one in the comments. And if you got any value out of this video, please consider dropping me a like and subscribing. I'm trying to put out these videos more frequently. So if there's any properties that you know of that you'd like me to do an analysis on, send them my way. And remember, invest well, trust Cody Charnell.